Indian SaaS startups have faced some ups and downs in recent years, and 2024 has brought in some mixed results. So, first, what's going on with the funding? On the surface, it looks like the Indian startup world is bouncing back this year. Funding for SaaS startups went by 33% in the first half of 2024. This may sound like a win, but here's the reality. Funding for these startups actually dropped a huge 70% from the previous year. In numbers, that's from $5.27 billion in 2022 to just $1.56 billion in 2023. SaaS funding actually peaked in 2021 with over $5.3 billion invested, but since then there's been a steady decline. So while funding in early 2024 is improving, it's not close to what it was a few years ago. The annual recurring revenue of Indian SaaS firms grew to about $12 to $13 billion by 2022. At the same time, investments in the same sector increased 6 times, reaching $5 billion in 5 years. This increase showed that Indian SaaS is not just expanding but doing good at a good pace. In the first half of 2024, Indian SaaS startups raised $915 million. That's about 18% of all the startup funding in India for that period, totaling $5.3 billion. Here's some good news. The unicorn numbers are still strong for SaaS in 2024. 3 of the 6 new unicorns in India this year came from SaaS, that is Ola Kritrim, RateGain, and Periphos. And in addition to these 3, companies like Ather Energy, Rapido, and MoneyView also joined the unicorn club this year. But there's a catch. Despite some unicorns popping up, there aren't as many mega deals or those giant funding rounds of $100 million or more. By the middle of 2024, there were only 2 mega deals, which matches the total for all of 2023. Compare that to 2022, when there were 11 such deals in the SaaS world. So it seems big investors are being extra careful. Most investment today focus on earlier stages. Seed investments rose by 65%, averaging about $1.7 million, while Series A investments nearly doubled. However, large late-stage deals have declined, with companies raising about $75 million on average compared to $100 million in 2021. A sign that companies are being cautious in current market conditions. Anirudh A. Damani, the managing director at Artha Ventures Fund, says there's been a market correction. In simpler terms, this means the market is adjusting after the funding boom of 2021, where valuations got a little out of control. He gives the example of Bangalore-based cloud communications platform Twilio, which at one point was valued at 40 times its revenue. That's pretty high and considered unsustainable, meaning it couldn't last long at that level. Now, Twilio's valuation has dropped to a more realistic 3 times its revenue. The money points out that high interest rates have ended the era of cheap capital, which used to allow startups to grow quickly even if they weren't profitable. Now investors want to see actual earnings, not just potential growth. So they are less willing to invest at high valuations unless the company has a clear path to profitability. Damani also thinks that startups should focus on sustainable growth rather than just trying to become a unicorn. He believes that companies with strong revenue and profitability will always attract investors and earn high valuations. A good example is Periphos, a SaaS startup planning an IPO soon. In 2023, it became profitable, making about 7.8 crores after experiencing losses than the previous year. For investors, this makes Periphos' valuation much easier to justify. Damani adds that many startups that raised funds at very high valuations in the past few years are now finding it hard to raise more capital unless they are willing to accept a down road. A down road is when a company raises funds at a lower valuation than before. He says this is a part of a global trend and not just something happening in India. Another sign of a slowdown is the number of mergers and acquisitions or M&As. In simpler terms, this is when one company buys or merges with another. According to the Inc. 42 report, India's SaaS industry saw just 37 M&A deals in the first half of 2024. For comparison, there were 124 M&A deals in all of 2023 and even more in 2022 with 240 deals. Most of the funding in India's SaaS, around 73% of a total $20 billion raised since 2014, has gone to horizontal SaaS startups. Horizontal SaaS companies serve many industries with general software, while vertical SaaS companies focus on a single industry. In early 2024, vertical SaaS startups raised $196 million, much less than $719 million raised by horizontal SaaS companies. Despite these challenges, the Indian SaaS market is currently worth around $14 billion and could reach $70 billion by 2030. Vertical SaaS is a massive opportunity that's still waiting to be fully explored in India. SaaS startups are increasingly using AI and machine learning to drive growth. They are developing AI-powered solutions for sales, HR, finance, and marketing, which allow companies to use predictive analytics, automate processes, and manage data more efficiently. This push towards AI-powered solutions could be the next big growth area for SaaS in India. At last, Indian SaaS startups have shown some recovery in 2024 with higher funding, new unicorns, but with big investors becoming more cautious, mega deals have flowed and valuations are adjusting to more realistic levels.